Hey everyone, John Murphy, CSSI. I thought we'd have a little fun and do another episode of Is This a Good Building for Cost Segregation or Not? Tips for CPAs, tax advisors, and commercial real estate brokers. I get questions a lot, particularly from owners and a little bit from CPAs. But I also think that there's a lot of CPAs and tax advisors that are making assumptions on buildings that they're not good for cost segregation. And it's not that the owner can't benefit from more depreciation. They don't have any idea if it's worth the cost to do the study or not. So what I always encourage is to get the estimate, get the cost of what it's going to be to study your building, and you'll get a nice professional estimate what that looks like. So anyway, let's take a look at the. I just went to Charlotte and I just grabbed the most recent solds in the last 3 months. Just a random bunch of properties that are here in Crexie. And one of the things I just want to show you, let's just take, for example, this one here. It's 7212 Albemarle Road in Charlotte. So it just sold 1027 for $417,000. Now, I don't know what the land value is there. It's probably pretty expensive. But let's say it's roughly 25% or maybe a little bit more. So let's just say that there's $117,000 for the land and $300,000 in basis for this office. If you go to costsegcalc.com, see it right up here. Okay, this is the site that I have pointing to my site. So if you hit that, you're going to end up at my site at CSSI. We've got a fantastic calculator there. I know there are other calculators out there as well, but this one I think presents it really well. It also pulls from all of our data over 22 years and 60,000 buildings that we've studied. So I'm going to come down here, I'm going to find the asset type, and that is I don't know if it's a medical office or just a regular office building. We'll just call it a regular office building. Tax rate, let's say the owner's at 32% tax rate. The building cost, we're going to enter that in. So the building cost basis is $300,000. We backed out the land value, and the month it went into, I think I said it was October of 2025. Sorry, 2025. We'll put that here, and we're going to apply it to the 25 tax return. So we hit calculate, and it's going to run right now. Okay, so it gives us an estimate. So it's saying, hey, this owner could expect, let's just call it somewhere between $50,000 and $70,000 in an increased accumulated depreciation deduction. If they don't do cost segregation this year, they will get $1,605 in a depreciation expense because it's prorated because they bought it late in the year. And of course, then if in 2026 they're going to get more than that, it's commercial building, so they're going to get 2.5% of the building cost basis going forward. So 2.5% of $300,000 is what, about $7,000 or something each year going forward. But if they do cost segregation, they can get $50,000 to $70,000. They're going to get somewhere between 8 and 10 years of depreciation they're going to get in year one. So that's a big deal, especially if they can use it. If it actually does help them from a tax saving standpoint. So, or it's a deferral, but it will help them in their cash flow. So they're looking at a 32% tax rate. They could save between, call it $15,000 and $20,000 on income tax rate. I'm not going to give you the actual quote to what this is here. We would have to run it past our team, but it's a fraction of this. So it's a small amount compared to what you're going to save on your taxes, and that's just for that's for a small building. Let's look at let's go look at, I don't know, this is the first one that came up. Let's see what this is. Looks like it's maybe some kind of office retail combination. It says medical office, I guess. So we'll take a look at medical office again. This isn't very expensive, $800,000. It's a pretty nice piece of land. Maybe that land's worth $200,000. So maybe the cost basis on this one is $600,000. So if we come up here, let's go to medical office. Tax rate for this one, we can leave it at 32 again. Let's go $600,000 cost basis. They just bought this 2025 tax year 2025. Hit the calculator. Okay, and they're looking at an increased accumulated depreciation deduction somewhere between $116,000 and $182,000. So again, we give you a barbell, so conservative end and a high end estimate. A lot of these, of course, just the nature of the bell curve, they're going to end up somewhere in the middle of this. But if they don't do cost segregation, they're going to get a $3,200 depreciation deduction this year. Then they'll get more than that, obviously, for next year. They'll get 2.5% of $600,000, or what is that, $13,000, $14,000 a year. But again, they're getting roughly 8 to 10 years of depreciation in year one. And these are on small buildings. These are not big buildings. Obviously, it makes a lot of sense if you have a 2, 3, 4, 5, $10 million, $50 million building to do cost segregation. But even these little buildings can also benefit by doing cost segregation. The cost is not going to be prohibitive for them to do this study. It's going to be a benefit. Typically, what we'll see is 5 times return would be a low amount, but typically it's going to be 8, 10, 12, maybe even 20 times the return of the cost, net cost of the study for what they're saving on their taxes. So anyway, so if you go to costsegcalc.com, okay, right up here, costsegcalc.com, you can run your own estimates and see what your building might be able to generate for tax savings for yourself. If you want an actual quote for the study, you could just click right here, request a free personalized analysis. I'll get you the quote. You can call me as well or send me an email, but we'll get this out to you. But for commercial real estate brokers that are doing deals representing buyers, this is a fantastic tool. I talk to you guys all the time. I say this should be part of the due diligence on any property that you guys are working on with a buyer, because this helps increase their cash flow. And a lot of the owners are not aware of it. And the CPAs, this is a helpful tool for you to try to wrap your head around, hey, is this building even worth studying? The fact of the matter is if the building cost basis is north of 200 grand, it's normally going to be worth studying. In fact, we'll go back many, many years on buildings and do look-back studies and still be able to deliver tax benefits to the owner. That's cash flow that's sitting on their depreciation schedule. It's an accounting issue. We can extract that from the depreciation schedule and put real money in their bank account. My name is John Murphy. I represent a firm called CSSI. I work all over the United States. I work with building owners to help them save money on their income taxes by doing cost segregation on their buildings. I work with a lot of commercial real estate brokers. I work with a lot of CPA firms and tax professionals all around the country to provide excellent studies, great communication, easy to use reports. We get these studies done in a timely manner, and I would love to work with you. Let me answer any questions you might have. Reach out to me, 864-276-1448. Give me a call anywhere in the U.S., and we'll talk soon. Have a great day.